How? Oh, you have axes?
Yeah.
Now I see where it's going. Hey guys, so welcome to the channel once again, and in today's video it's a little bit special because we have a special guest and a big fan of mine, and this guy runs his own YouTube channel and it's none other than Kelvin from Kelvin Learns Investing. So Kelvin's channel has exploded over the last year that he was on YouTube, and I'm very lucky to be friends with him and also to learn from him. As many of you guys know, Kelvin focuses a lot on the stock market, so during the chit chat session, it was a little bit casual, but I found out a lot of mistakes that I made in the stock market as well. At the end of the day, I do hope that there are a few pointers that we talked about during the session that will be able to give you some options about what you can invest in, how you can do in the market, and what to look out for as well. So if you guys are ready, let's go! Hi guys, so today we have Kelvin here. So we're going to ask him some questions that I have that is burning inside of me regarding the stock market, because I'm not an expert in it, and I kind of know that I got a few mistakes here and there already. But okay, yeah, of course. As long as you don't make too many mistakes, I think you're going to be fine. But mistakes make you a better person, right?
Right.
Okay, so Kelvin, so maybe you can share how do you start investing, or why do you even start investing in the first place? Because many people want to start, but they are afraid of losing money, and some of them has the, I won't say misconception, but some of them have the fear that investing is bad because you can lose money. There are some companies who are like overvalued in certain ways, and like the stock keeps going up, it's a bubble, and then when the stock crashes, it's like, oh no, see, it's dead. Like Tesla. Don't buy. Yeah. Yes, Tesla. 1001, right?
1001.
I hope it hits 1001 tonight. Then we have a good weekend. So maybe you can just like share like how you got started with investing in stocks.
So for me, I started around 2016. The reason I started was because I had spare cash lah, and because I wanted to hot big like everyone else. So I was okay with losing the money. But I think my starting point was wrong, because I started by trying to buy low and sell high. And I didn't really care about which stocks that I buy. So right now, I don't even remember what stocks that I buy lah. I only remember that I lost a lot of money, about 5 to 10k.
Wow.
So after paying a tuition fee to the stock market, 1 year later, I changed my strategy to dividend investing, and later index fund, growth ETF, growth stocks, kind of thing lah. So let's say if you just started in investing, the thing to remember is, as long as you invest in good stocks like Google, Apple, Facebook, those kind of things lah, or maybe not Facebook. Facebook right now is called Meta. Google, Apple, Meta. It should be alright over the long term lah.
So now your strategy is to really invest for long-term stocks.
Yeah, for long-term stocks. The idea is to buy and accumulate, not buy and sell for me.
Okay, so you mentioned accumulating stocks and not selling for the time being, right? So, but then as with everything in life, there must be an end goal of why you invest. I mean, if you never sell stocks, it's going to be $1 million in a screen, that's all, right? And then you own the stocks.
Yeah. So very recently, I saw this video lah. It talks about this idea of buy, sell, and die. Very recently, I saw this video. It talks about buy, borrow, and die. So basically, what the rich people do is they buy an asset, maybe it's a stock or property, then they borrow against the asset to get extra money.
Yep.
Then they use the asset to invest or whatever. It's basically free money.
Their lifestyle,
yeah.
to support their daily expenses.
So then they retain the original value of the asset. So then when they pass on this asset to the next person. So I think this is my strategy right now, to accumulate as much money as I can, then borrow against this asset to gain more returns lah. So one of the ways is to use margin, because I can borrow margin against my asset. Another way is to sell options to generate income against my asset. So when you accumulate, right, you gain a lot of leverage lor. Yeah. So buy and sell is not just one strategy. It's a very low level strategy. But if you can buy,
that's my strategy now. Buy and sell.
It was mine also. But when you can buy and borrow, that is a much higher level strategy.
But then it comes with risk as well, right? Because you're leveraging.
So you just have to properly manage your risk. Like not over borrow, like maybe borrow 10 to 20% kind of thing. Yeah.
Okay. So speaking of options, I think we all know that you do have some Tesla options. Are you running Tesla options now?
Yeah.
What?
No, you back in the money.
So what made you invest into Tesla? Was it like Chicken Genius? Because I watch his videos. I would say that he gives me a little bit of influence. I don't really care about Elon Musk because I know that he's always smoking weed and stuff. But what made you invest into Tesla? Was it the tech? Was it the AI?
To be frank, I think it's really Chicken Genius. I started by watching his videos then I started by watching other videos like solving the money problem. There was the other guy, Dave, also. They were all talking about how good Tesla was. Then the more I researched about other YouTubers researching about Tesla, I actually saw the potential through them. So that's how I started into Tesla. So I didn't discover the stock by myself.
Okay. So I found out about Tesla when it was $200, but at that point of time, I just started investing. So like, wow, $200, that's like super expensive, right? Yeah, but then I bought it at 600. So.
Better already.
I mean, but that was pre-split lah. Yeah, pre-split. Yeah. But it is what it is. So okay, so let's talk about options. It's something that I really want to learn, and before we made this video, there was some mistakes that I just found out today that, hey, I'm making a bad move with options. So just for the record, I bought a Disney call option at 220, which is out of the money, and it expires on 1st January. So I'm in the red now for like I think a couple $100. So as a beginner, will it be easy to make money through options? Because there are, I mean, you can sell put, you can buy put, you can sell call, you can buy call. So these are the 4 things you can do, right? But each of them has different things. Yeah. So as a beginner, if let's say I really want to go into options, what would be a good way to do it? But it's not financial advice.
There are 3 ways, right? Your way, there's buying out of the money options. There's the Wall Street bets way. If you do that, it's basically going to the Singapore pools and buying a $1 ticket. If you kena, then you win. If you didn't kena, then you lose everything. So the other way is a much clever way. You buy in the money call option. By doing that, you can control 100 stocks at 1/3 of the price. So it's a good way to leverage your assets, leverage your money. And the third way, which I'm personally doing, is by selling call options and selling put options. So because by selling, I collect money. Whether the stock goes up or goes down, I still get to collect money.
So when you sell put, basically you are looking to purchase a stock at a lower price in the future.
Yeah.
Then when you when you sell call, you are looking to sell
with the stocks
at a certain price. Yeah. So I bought a call option, and someone actually sold it to me lah. Yeah. And I paid that as a premium.
Yeah, the guy is
happily laughing to the bank now. Shit.
Yeah, so if you want to start on options, you should either buy in the money or sell out of the money.
Buy in the money and sell out of the money.
Yeah.
Okay, I gotta take that note down so I don't make the same mistake again. So let's talk about stocks now. So other than options, the stock market offers you products like you could buy stocks, you could buy index funds, you could buy ETFs. Yesterday I was talking to a Discord member. So this person was a bit shy to ask questions about all these in the big group chat because there's a lot of information out there. And people say, you buy this stock or buy that stock, and sometimes the stock prices are very high. It's not easy to enter. So for example, if you're going to enter Tesla now, it's like $1,000, which is almost half a month's salary for an average working person. So as a beginner, you have a few options here. 1, I can go growth stock. Number 2, I can buy ETFs or funds. Or number 3, I can buy dividend stocks. Yeah. So these 3 options, right? So as a beginner, what would be a good way to start?
I think it depends on where you are in your life. If you're in your 50s or 60s, then your purpose of investing is basically to accumulate I mean, grow your wealth slow and steady so that it can support your retirement life. But if you're in your 20s or 30s, your purpose is to grow your money as fast as you can so that you can try to achieve an earlier retirement. So that means that if you're in your 50s or 60s, you should try to invest in much more stable stocks like dividend stocks, or if
ETFs.
Yeah, if you're very young, then go for growth stuff like growth ETF, Tesla, those kind of things lah. Yeah, so it depends.
It depends. So, but I think a general rule of thumb is that before you even start investing is to have at least a 6 months float, so that in case anything happens, you lose your job, you still have 6 months of salary or 6 months of income to support you.
I think it's not a hard rule lah. Let's say if you are not married, if you are still staying with parents, even if you are in your 30s, right, you have your parents as your backup plan. In that case, I would not recommend even trying to save up for 6 months. Not financial advice. Because
but to invest as fast as possible.
As fast as possible.
Market keeps going upwards.
Yeah. So and also it also depends on how easy it is to find job. Let's say for me, in the IT sector, you can find job within 3-4 weeks. So you don't really need that 6 months if you have certain conditions fulfilled lah. I would think.
Yeah. So I think because the main general topic here is personal finance, right? So everybody is different. Like your situation is different from mine. Mine will be different from my friends as well. I think there's no fat and fast. So I think there is no hard and fast rule that you must have this to have this to have this. But everyone is different because risk level as well. Yeah. So I have majority of my holdings in crypto. I can accept that risk. But then if it was supposed to be if it was put to someone else, they might be like, oh my god, like 40%. No, I cannot. I would prefer to have it in stocks or something else.
Genius had 90% in Tesla, right?
Yeah.
Some people is like, what the hell?
I mean, but then when you hot one time, it's like, wow.
I wish I bought cheaply when it was cheap.
So where is he now actually? He's not based in Singapore.
I think it's Germany or whatever.
Ah, right.
I think he didn't buy the return plane ticket.
Okay. That I don't know, but but okay. So like you mentioned, you can start investing as soon as possible. But let's say for example, if I want to buy the S&P 500, so I do own some VOO, which I know is another mistake because of the conversation we had. I should buy CXPY. Is it? Charlie. Singapore. Poland.
X-ray.
X-ray. Okay. So I should have bought that instead.
Yeah, because it charges only 15% on your dividends instead of the usual 30%.
Okay, so how about capital gains? Does it still take the 30%?
There's no capital gains.
But VOO's dividend is only 1%, right? I don't know.
Yeah, so it takes 30% away from your 1%.
Right. So I'm left like 0.7.
Yeah.
So let's talk about crypto now. We all know that Kelvin has some Bitcoin, some ETH, some ADA as well. Yeah. And recently started XC Infinity. But
yeah, so I got smooth left potion.
All right, man. Okay, so what made you started investing into Bitcoin or buying Bitcoin? Because there is a lot of negative news about it, right? Like Bitcoin's a bubble, it's a scam, it's a Ponzi, it's another tulip mania. But why do you even start, or what made you start putting money into it?
I think it is FOMO lah. So I started at the end of 2020 when Bitcoin was going up. So like everyone else, I FOMO into Bitcoin and luckily it went up. So that's how I got started. And I actually started researching about crypto after I got in. Like why is it such a good investment? Why is it going up?
So you buy it and then you start reading.
Yeah, like a true Wall Street bets guy.
That's the best way to lose money, right?
But
buy first and then read up.
Yeah. Luckily it would turn out okay lah. But anyway, I invested money that I could lose.
Fair enough. That is, I think it applies to everything and not only crypto. Yeah. Even into stocks, into ETFs, you should put money that you are willing to lose.
Yeah. So the more I research, the more I see the potential in Bitcoin, and not only Bitcoin like ETH, ADA, all the other cryptos lah. Because we are in Singapore, we don't really feel the effect of inflation. But let's say if you live in the kind of Zimbabwe, those kind of places, the inflation prices is actually going faster than the Dogecoin.
Oh yeah, faster than the moon, right?
Yeah. So they will feel the effect. So to them, this kind of crypto plays a very big part in their lives. So yeah, it solves a lot of problems which we are not aware of.
For sure. So I believe that you might have seen rug pulls or exit scams as well. So I'm actually halfway through a video doing it. So I have entered a rug pull before.
Whoa, nice.
Yeah. I mean, but it was money I could lose, right?
Okay.
So I think back then there was a few coins that came out, you know, like $100 you can buy a few billion tokens, right? And that's what everybody wants. So it's like how Shiba Inu started, and then Shiba Inu is just like going up straight into the moon now, or maybe going to Mars.
I think it went down after Elon Musk.
Oh, but now it went up by another. I think this week it went up by 500% already.
What the hell?
Yeah, so I sold mine on like Tuesday. I mean, I could have 5x, but you know, at that point it was a good 2x. Like, taking profit, there is no loss.
Yeah.
So, you know, with rug pulls and exit scam, I'm not sure whether you have seen any, but I believe that you should be wise enough to know that there are a lot of scams happening in the world, in the crypto space in general. So what do you look out for when you see this? Or when you look at a certain token, right? How do you know this is not a scam, or what's your strategy to it?
For me, there's this website called CoinMarketCap.
Yeah.
So for me, I just go to see what is the top cryptos. Those are basically the blue chips of the crypto world, right? Like SRP, ADA, Bitcoin. As long as you buy those, is
top 10,
very
top 20
likely
tokens.
it's not a rug pull.
Yeah. But now Shiba Inu's in the top 10 also, right? Dogecoin is in the top 10 also. So it's a bit risky, but I think if you buy like the top 10,
the
you're
top
more
five,
or less
you'll be
pretty
more or less be safe lah. Just don't go for those coins that can promise you high returns, right? Yeah.
Well, okay, so there was a period of time there was a Wall Street bet token as well.
Okay.
Yeah, just putting it out, like there was like coins like I think there was one called Elon Sperm.
Elon Sperm, yeah.
Yeah. Like very weird stuff.
Kamis. That's one.
There is?
Kamis.
Oh shit. But okay. So I think that's the end of today's video. Thank you so much for coming by. I really appreciate it. So I do have some things that I have written down in mine, and I think we should I should write it down on a notebook later on and remind myself, don't ever do this in the, what's that? Buy
Out the money call.
Out the money call.
Yeah.
Don't buy that.
Don't buy that.
Buy in the money call.
Unless you want to try your luck.
Well, I mean, we have the Toto every Thursday, right?
Yeah, the total is
8
much
mil.
better.
Oh, really?
Much easier.
Much easier because just $10, right? It's still $100.
Yeah.
Okay, but thank you so much, Kelvin.
Yeah, thanks
Really
for
appreciate
having
it.
me.
So that was the whole session that we had with Kelvin. I think it was very insightful for me as well because I learned my mistakes, I know what I did wrong and what I could have done better as well. So this video might be a little bit long, but hopefully for those of you that have watched it through the end, even though if you're new, I hope you learned something. Even if you're experienced, I do hope that you learned something as well. So something that really hit me a lot is about the buy, borrow and die mechanism that he talked about. I think that is pretty cool. It's something that I think a lot of people are doing when they're ultra wealthy, and that could be something that we can consider for our futures as well. But nonetheless, do let me know in the comments down below what your thoughts about the session are. If you guys like things like this, do let me know as well. In the meantime, don't forget to drop a like, subscribe, and I'll see you next Monday, Wednesday, and sometimes Friday.